saw weak operating performance in Q1 as execution was slower than expected. Do you see things changing?
We have clocked a turnover of 720 crores in this quarter, which is almost similar to which was last year. But this is as was planned. So the first quarter was definitely flat. But over the whole year, the turnover will catch up to the guidance growth of approximately 30 to 35%. So we are confident that we'll achieve, because most of the projects out of the 10,000 order book which we have, balance order book which we have, 5,500 is pertaining to projects will start after 1st October only. So they'll start contributing to the revenues only post H1. So from that perspective, on a whole year basis, we continue to stick to our growth rate of 30 to 35%, and we are confident to achieve that.
For a company in the roads business, do you think quarterly ups and downs would be common due to completion of projects being at different stages? So different stages of essentially revenue recognition. So what is it that you would tell investors to be prepared, to monitor your earnings so that there is no misalignment in expectations?
So, I mean, quarter by quarter, we generally, a budget is not made out to investors, but our yearly plan is there, and we'll stick to the yearly plan. And these kinds of at what stages each project is, depending on that, turnovers do stack up in the quarter accordingly. So there would be some quarters where the turnover will be lower, and then it will pick up in the next quarters, depending on the activity and the stage of kind of activity which is carried on.
Paresh, you'd cut your FY19 revenue growth guidance as well to 30% from the earlier 40%. What's the reason for the same?
So 30 to 35%. This is basically dependent on the availability of appointed date for the new project which we are going to get. So we will continue to target a 40% growth, but we are keeping it presently at a 30 to 35% growth. But we'll always endeavor to achieve more, because the kind of order books we have, and if you get appointed at the right times, definitely we'll have to execute those orders in time.
So you're saying that there is scope that there could be an upside to this 35%, right?
Yeah, definitely.
Okay, fine. Just wanted to understand about what the order book is currently like. What have been the inflows in the quarter gone by, and what really is the realistic expectation for FY19?
So in the last quarter, we didn't have any road projects coming in the quarter Q1. Most of the orders which was brought in was in March 2018. So the expectation for this year is, though there has been a bit of a lull in the bidding activity in the past 3-4 months, but it will pick up in this next 4-5 months. And we believe that we will take up orders to the tune of 5,000 to 7,000 crores in the road sector, and approximately 1,000 to 1,500 crores in the power sector, which will then give us good visibility of revenues for the next 3 years.
Right. Can you give us an update on debt financing of hybrid annuity projects?
So we have bankers identified for all the HAM projects which we have won. And in the 4 projects, we have already received sanction letters and documentation under progress, and they'll get closed in time. And the 5th one, where the concession agreement was signed later on, that also is in the right track to get it closed in the right time. So we have no worries on the financial closure of all the 5 HAM projects within the stipulated time as given in the concession agreement.